things that you must know when purchasing a home. So, in entering into 2025, there have been just two completely opposite spectrums of opinions when it comes towards homeownership. The first group says, hey, you know what? We're a renter nation. We're going to rent until we die. We don't need to be a part of the home buying or a home ownership agenda. The other group is, I want to live my American dream out to the fullest, and I want to participate in home ownership, whether that's right now or waiting, or hey, you know what, interest rates are a little bit high right now and or purchase price are kind of creeping up. I still want to be part of the homeownership, and I want to know what it takes in order for me to gain that, to gain access to that. This video is specifically going to be for you. So first, it's going to involve financial planning. So when you're looking at purchasing a home, it is going to be imperative that you look at your finances. It doesn't necessarily mean that you have to go hire a financial planner in order for this to manifest itself, but we need to scrub deep and make sure that the affordability piece for you specifically is there. So we're looking at your finances, right? It's going to be your net income. When myself, the loan officer, we take a look at all of your qualifications. We base everything off of your gross income if you're a W-2 wage earner. When it comes towards our business owners, we're looking at your net income. But a lot of first-time home buyers, when they're entering the marketplace, they're generally a W-2 worker, and we're looking at your gross income. That's something to take into consideration because that's your income before any of your deductions, all of your taxes are taken out. So you need to really sit down deep with your family or yourself individually and really identify what's going to be my threshold when it comes towards purchasing a home. Because it's not just the mortgage, right? You're going to be responsible for everything in the property that goes wrong, right? That's that transition from being a renter to now owning your property, right? If the AC goes out, what are going to be the estimated expenses for that, right? If there's an electrical problem, that's going to be something that you have to worry about and incur out of pocket. If you want to make any upgrades or renovations to the property, if any of the appliances go out, if the piping, if there's an issue with the piping, you have to get a plumber involved. Those are all expenses that you have to incur individually. Have you created a budget to say, hey, if anything goes wrong with the property, then I'm okay pulling from my savings. Having these items top of mind, it really then makes whether or not homeownership is going to be the best thing for me right now. Knowing that I have to come out of pocket for certain expenses when it does come towards the property, and if anything goes wrong in the home, you are responsible. So that's going to be the short end of the stick. But the positive part of that is that as the home continues to gain appreciation every single year, then that's going to be appreciation that you get to put into your own pocket, into your generational wealth, that you're no longer investing into your landlord's pocket, right, by paying rent every single month. Instead, you're investing into yourself. So that's just something to consider when you are purchasing a home. Number two, we want to talk about budget. A lot of times my clients come to me and they're like, hey, what do I qualify for? What's going to be a budget for my purchase price? What I give you when we sit down with me, I can go over a few different scenarios, but a lot of clients, they want to know, hey, what is my max? But your max buying power might not fit your comfortability when it comes towards your mortgage payment. And that's, again, something that you have to look into. We're looking at your financial planning against your budget. What does that actually look like? Maybe right now we're paying $2,500 a month in rent. And are we okay with that? Was that comfortable? Were you comfortable making those payments every single month? Are we comfortable increasing that in order to get the purchase price that we want? There is a toggling that we have to do back and forth between myself, the loan officer, and also you, the buyer. Because I want to make sure at the end of the day, once everything's said and done, you get the keys in your hand, that the affordability piece is still going to be there, and you still have peace of mind as you're beginning to live in your home, right? I don't want you to be house poor. So these are things that you have to think about and premeditate on prior to you sitting down with a loan officer as well. But these are also things that I can help partner on with you. So you're not alone in this journey. I do a lot of mortgage planning as well for my first time home buyers or those that are kind of on the fence about purchasing and not really understanding what does it all look like for me specifically. Or maybe, hey, my lease is going to end in 6 months. I want to start planning a little bit. What does that actually look like for me? So I do these things as well. So that way, we're staying in flow. We have a bit of a plan. We have a few months in order to execute on our plan in order for us to feel really confident moving forward once we're ready to flip that switch on homeownership. So that's going to be a huge thing, just making sure that your budget is in place. You've itemized out all of your expenses, so we can guesstimate some utility expenses, if there's any HOAs in the particular community that you're interested in. What does my car insurance look like? My credit card payments? After all of my expenses, am I still comfortable making X amount of mortgage payment every single month? You let me know, right? Once you've done that homework and that due diligence on your part, then it makes it a lot easier for me to come to terms with, hey, if I want this much mortgage payment, that's great. That's equivalent to this much house. So we kind of come together to figure out a good plan for you. 3 is going to be professional assistance. So when you're out there in the marketplace and you're looking for the best loan officer, the best realtor, I know a lot of times we do go to our parents, right? Our parents, they know best. They told me to work with such and such, or such and such is in the family, and they're your cousin. You need to work with them. But that doesn't necessarily always mean that they have the most experience. And nowadays, there was an influx of realtors and loan officers entering the marketplace when the rates were really low during COVID time. And, they maybe closed a few loans, and as things started to get tough, rates started to inch back up. A lot of these same people that entered the marketplace and were able to close loans, they're no longer in the business. So our business is very up and down. It's cyclical. So you really want a professional that's experienced all different types of seasons in this business, or during COVID time, during the rebound, everything. So that way they can really give you some guidance on what the predictions would be into the future. Of course, nobody has a crystal ball, but experience does matter in this space. So that way, when you have questions about your loan or the process or something that comes up, you want to be able to lean on your professionals in that, so that way they can explain it to you. And it's not explaining it to you just so we can rush you off the phone. All right, I got that question out the way. No, we want to explain it to you so that way you have a comfortable understanding about what you're moving forward with, because it's going to be one of the largest transactions of a lot of Americans' lives. So it's very important that we identify, hey, if there's a question that you do have, that you understand the why behind it. This is what you need to expect moving forward, so that way you feel confident in the process. 4 is going to be securing that pre-approval. So we want to make sure as you enter into the marketplace and you begin your house hunting with your realtor, that you have a pre-approval in place. A lot of people like to put the cart before the horse. I don't like that, right? And the reason for that is because a lot can happen when you're out there shopping. For example, I've had a buyer before, they found their dream home. This was it. It had everything, all of the nooks and crannies and everything, and the next gen suite that they wanted in order for grandparents to live with them. It was ideal prime. But when they decided to come sit down with me and do things the proper way, we went over the payment and credit and everything else. They weren't 100% comfortable with that mortgage payment, right? So these types of things can happen if you don't sit down with a professional first. We identify what your comfortability is when it comes to your mortgage payment. Then you enter the marketplace to begin shopping for your property. And it is very specific. There is a very specific way in order to do it for us to do the process, right? Because we want to be able to identify if there is anything that could potentially prohibit us from getting an approval. Let's identify those things up front for you. Versus you get into contract, now we're doing the application, now there's an issue with credit, now there's maybe an issue with assets, or now there might be an issue with the payment. We want to be able to identify everything, or as much as possible, up front as you start the application process and we lead our way over to a pre-approval. So pre-approval, right? That basically means I've reviewed credit for you. One, you've completed the application. I've reviewed credit for you. We've gone over the report. We've gone over your mortgage payment, your buying power, what your cash to close look like. We have a soft idea when it comes towards the rate, but nothing's going to be locked in yet. So everything can still adjust for that. And you've sent in all of your income documentation, right? It's your pay stubs, your W-2s, your tax returns if it's needed, your bank statements, your ID. If you're receiving any child support, I have the court orders for that. Whatever it might be, I have collected documentation, and we have everything to support your income, your assets in the file, and anything else that might show up on credit or that we need to address with the underwriter. We've collected it up front. So that way, when you find your perfect home with your pre-approval letter in hand, your golden ticket, then we can move very quickly into underwriting, right? So that way there isn't going to be any delays, there won't be any issues, any hiccups in order for us to get that first approval from the underwriter. So the pre-approval process is very important, and a lot of people, they don't put as much importance behind it, but it can save you a lot of headache throughout the loan process itself. So get your pre-approval. Like I said, partner with an experienced realtor and loan officer in order for us to navigate you through the home buying process properly. Number 5 is the money. So we have to factor in that not only are you coming to the table with your down payment, but there's also closing costs associated with the loan process, right? Those are going to be the lender fees, title fees, credit report, income verification fees. You're escrowing for taxes and insurance. We have an impound count for also tax and insurance, any HOA fees that we have to collect up front, any HOA transfer fees, HOA certification fees. There are a laundry list of closing costs that are associated with the loan. And once we disclose on your file, you also get a copy of all that. But we have to be cognizant that it's not just the down payment that you have to come out of pocket for, right? It's also going to be your closing costs. So not only do you have to come out of pocket for down payment, your closing costs, but know that you should generally get a home inspection, especially if you're looking at a resale property. And in some instances, even for a new build, right? Home inspections, depending on the area, that can kind of have its range for $300 to $500, just depending on how thorough it is, what company you're using. So that's also an upfront expense that you have to worry about. And also the appraisal. The appraisal cost is upfront, right? So once we get your disclosure signed, you sign your intent to proceed, I'm sending you out that link to go ahead and pay for the appraisal upfront for me. So generally appraisal, that can run you between $500 and maybe $700, just depending on the property type. And you will get a credit at closing for the appraisal, but not for the inspection, right? So there are going to be some pretty big differences on appraisal versus inspection, and you can look at my other video when it comes towards a home buying process to see about some of those differences. But in addition to that, right, you also have to worry about coming out of pocket for your earnest money deposit. Generally, it's going to be 1% of the sales price. So if you're looking at a home for $500,000, 1% of that's going to be $5,000. I do give you your credit at closing for that earnest money deposit, but note that's still going to be something expected from you up front. So this is where it becomes very imperative for you to look at your finances, understanding what am I actually capable of when it comes towards budgeting in order for me to purchase a home. And again, emergencies can come up. You want to make sure that we're budgeting for this as well, for your moving expenses, right? Relocating from maybe one state to the next, or from one area, one home into the next home. Those all come with associated expenses. My team and I were licensed in 49 states, so stay in touch with us. Subscribe, like, and also hit the notification button so that way you can get notified once we release our latest video.